Okay, good afternoon, good morning, good evening, wherever you might be when this video finally gets released, whenever that is. Howdy, y'all. This is part one of trading with order flow. You'll notice I have this on a 250 delta chart right up here. You'll see delta 250V chart setup. You'll see delta volume per bar is 250. That seems to work pretty well on the S&P. You might want to try it on different instruments if you trade different instruments, and I will walk you through a little bit on how to do that, how to figure that out. Okay, so what we have here a bunch of, we got a chart with a bunch of lines, and this is all numbers, bars, and all this kind of stuff. Okay, you don't have to worry a whole lot about the numbers bars. What we're looking for on trades, to get into and to get out of trades. We're looking to get into trades. We're looking for, see these little green little boxes. Green little boxes. I have a red little box up here, red little box up here. I've got a red box here. I've got a red box here, and I've got two green boxes right here. Okay, what those are reducing volume. Usually, but not always. Usually, reducing volume, if you've got a green box, it's reducing volume on the sell side, but increasing volume on the buy side. Now, on this one, this particular box, let me see if I can zoom in on a little bit. You can tell that's not exactly the case. It's not reducing volume on the sell side, but it's reducing volume on the buy side. Okay? You'll see that the next bar, when it opens up, because this is a down bar, this is basically a sell bar. The sell bar comes to an end right there at 42.12. The next bar opens up right there. You got a buy or a green box right there. Okay, what you're looking for to do a buy or a sell, you're looking for either a green bar on two consecutive, or this little green area here, little green box on two consecutive candles at or slightly above the same price area. Okay, so let me explain that a little bit. At 42.12 to 42.12.50. Okay, so there's three prices there, three price areas, or three prices. They're conforming to an area that I've got increasing volume going up, right? So that's colored green. So what you're doing is you're having more buyers as price goes up. All right? You're getting more sellers as price goes down. But at the end of that bar, it's a completed auction. You've got, 50 some odd buyers or 50 some odd sellers out the bottom of this bar. Well, they're obviously being absorbed. The reason why we know that is because on the next candle, when this guy closes, remember he's closing right there at that price at 42.12. The next candle opens up. It's a green candle, right? Well, we don't know where it's going to go, but within 3 ticks, we know that look at that, there's 57 sellers there, 50 sellers there. There's basically over 100 contracts right there, and they can't push price down. So where are we going to go? Now we've got increasing numbers of buyers. You see a selling imbalance right there. It's SIMBB means a selling imbalance at the bottom of the bar. You're also looking at for confirmation. So once you get this right here, you get that green area. This is the warning bar. That's the warning right there. That area says watch for a buy in this area. Okay, you've got a selling imbalance. You've got absorption, obviously, either absorption, iceberg, or whatever, sitting down. Somebody's absorbing all those sells at 42.12, so they want the market to go up. Next bar opens up. You still have the selling imbalance there, remember, on that previous bar. Next bar, what happens? 1, 2, 3. You've got increased buying. on that bar, right? Increased buying. The sellers are getting absorbed. What do? You get into the trade. So the moment this forms, it will form. The next price you'll be able to get into is right there. So you go long at 42.1275. You put your 2, 3. You can put your stop loss down here at 42.1175. So you've got a buy here 42.1275, and you've got a stop loss down here at 42.1175. So what's that? 4 ticks of risk. So 4 ticks of risk. What happened? We shot up here. We're going. Okay. You've got a little bit of a pullback here. Okay. A little bit of a pullback. More buying right there. You can see. There's decreasing volume on the sell side as we come down, and then pop back up for increasing volume. So this was a little bit of a pullback and a continuation. You could get out here if you wanted to. If you want to get at the top of the candle and you see this guy right here, you see the red, which basically means reducing volume on the buy side. So our reducing volume, well, it could be reducing volume on the sell or the buy side, but it's at the top of the candle. At this particular point, it's reducing volume. On the sell side, it's increasing to the downside, but you don't have a whole lot of volume up here. Pull back, here we go, bam, and right up. Now you have a buying imbalance right there on that candle. On this candle, you get a buying imbalance at the top, and you get this red area right here. So what would you do? 1 tick below that, you could get into a sell right there at 42.1925. You would have your at 42.2025. You've got your stop loss there. Okay, so here you go. You go down, right? You literally could hold that trade. That trade came down. You had a couple of buys here, if you wanted to, but there's not a whole lot. The reason why I have that 42.1875 there, and I'll explain that in part 2 of this video. What you're looking for is at the end of the candle either a green area or a red area on 2 consecutive bars, and this would not be valid because it's not 2 reds and 2 greens together. It's a red and a green. So you've got, obviously it's a pullback. So you shoot up here, you get reducing volume up here, right up in this area, and here's your sell. But you've already got that. You've already got that right there. You could take that right there at 42.1925, have a 4 tick stop loss up here. You didn't have an area up here that's a little bit more risky trade. Okay, if you wanted to, you could wait until this guy. You've got reducing volume. You've got a red area up here, and you've got a red area 1 tick below it. Okay, so you would take your sell right here at 42.1850. That's a little bit better in terms of risk. 42.1850. Put your stop loss up at 42.1950, and as you see, it just went south. Okay, so I wanted to get this out really quickly. All you got to do is look for those areas. Look for the areas on the charts. Look for those areas, and I think you'll find the majority of the trades. You're going to win the majority of these trades. Okay, so you've got in. Where do you get out? You could get out here, okay, or you could wait to get out down here. You could hold this trade, or you could hold this trade right here at 42.1875. You would put your stop loss back up in here. Remember, we've gotten in right here. Whoops. We've gotten in at what? 42.1875, 42.19, right in here. 42.1875, for example. So we got in here. 42.1875. You could put your stop loss up here if you wanted to, and just write it down if you wanted to. Remember, there's a bunch of orders right here at that particular level, which was pushing the market down. That was at close. We don't know what it's doing there, but I will show you guys a method that once it passes this 42.1875 level, it's pretty much it's going to be a short trade, and you can hold that as long as you want. As you can see, you could scalp it. You're looking, here's the scalp sell right here. You're looking at a scalp buy right here. You could take it. It comes right there. You take it at the top of the candle. You come right back up here. You can get out and then get back in somewhere in here. Okay. You see these red boxes coming down. So even if you've got green boxes down here, they're pretty disorganized and they're pretty far apart. Okay, which means you don't have a lot of resistance to the downside. So here we go. You got green boxes basically saying, I'm trying to hold it up, but I'm not making it. So pullbacks trade, short trades all the way up in this area, short trades up in this area. There is short trades up here. This is a little bit of a, you can tell this is a pullback, and then we start shorting it again. Shorting it again. So if you look at these guys, you will see a majority of these things are winning trades. You're looking at anywhere a minimum of 4 to 10 ticks, maybe even more. Where do you get out? You can get out of the level. See right there where that level is, where they flashed up 215 orders down there at 42.950. You could get out there, or you could just write it down. Pick your target. Where's your target? Where's your target going to be for the day? And as you can see, it was just a short day. Now, let me get rid of that line. That's an old one. And it was just a nice short day. When price action came up here, you can see it just walked down value area low. It kept pretty much, it hit value area high up here. Came pretty much down, hit value area low, just kept going right through value area low, and then it started respecting value area low right here. Here's VPOC. It was respecting value area low pretty much all the way down, and pretty much all for the entire Globex session. And let's see what we got. See where they're flashing orders up here? They tried to buy it up at about 7:30 or so. About 7:30, they tried to push it up, and they start flashing orders up here. When you start seeing orders up here, like this, as a line, that's the market. That's a line in the sand, and it's saying, "Hey, don't go up here. Don't go up here." So it's a very good chance that there's a short continuation there. Keep trying to push the market down, trying to push the market down, trying to push the market down. Here is something else that I look for. I'll look for these I'll look for these either one, say for example, one price level lower. Like right here, you can see it's one price level lower, or you'll see a three bar combination. There's a lower one, there's an upper one, and there's a lower one. So you wait until the upper ones stop, and then you get a lower one. Okay? Here's the reason why. If you go back over here, if you look at this guy, all right, you're going, oh well, hey, I'm getting absorption, or I'm getting whatever up here. So what happens? That thing didn't go anywhere. So that was probably a lost trade right there. That was at 4:30 when the market reopened. There was, you're running right up against value area low there. So, but you've got a 2-bar long there, right? There's a short, but there's a short, and you're running right up against the long, and then there's a green bar. So you're obviously running up against, there's no interest in selling. There's 36 contracts sold there, 2 contracts sold there. There's nothing saying we're going short there, right there. So where do we go? We go long. But here's an absorption, here's an absorption, here's an absorption, here's an absorption. Okay? So what do? You certainly don't try to short here, because that's higher. Don't try to short there, that's higher. Don't try to short there, that's higher. I wouldn't even have taken that thing. I don't even have there's nothing up here. There's no reducing volume that says we're going to come back down. So I wouldn't have taken that at all. I wouldn't have taken the long there. Okay, sometimes you walk away from a trade because it's a little bit too risky, unless you see something else. Say, for example, if there was a bunch of orders sitting down here and they start flashing orders down here, yeah, that would have been a great long trade to take until you ran up against this sort of stuff right up here. At 42.20, they start flashing orders up there. So that's a place where the market is basically saying, we don't want to go up there. Here's our line in the sand to the upside. And as you can see, 42.20, what happened? It came up to 42.20 and then came right back down. So if you had shorted up in this area here, or if you waited for this two box combination right there, you could have shorted right there and then just come down. You got a long right here, and then came up and came right up against that area right there, which said, nope, we're not going there. So you made some ticks up the long, scalped some ticks up the long, scalped some ticks down to the short side. There's your short down to here. There's your long trade up to here. There's your short trade up to there. Just sit there and let it bounce across. If you didn't like that, then what you do is you take that trade there. Take that short right there, right in this area. Here we go, down, 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 down. Okay. Again, see the green boxes are going down, 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 which means we haven't turned around this market. We're still short and still short and still short. And we still got red boxes up here and they're going down. Which direction are the red boxes? If the red boxes are going down, green boxes are going down, we're going down. We're shorting. We're going to ride this puppy down. If you start seeing green boxes at the same level or going higher, that's a warning saying, okay, wait a minute, maybe we want to take that. Like, for example, right here. Came down, right there, bounce right off it. You take the long there and ride it right back up to this previous level right up here. Start looking for that as you get up into this area here. See, there's a red box there, there's a red box there. That's where they shorted the market before, or that's where they tried to turn the market around. So you could use that as a target and then wait for your next opportunity. There's the next opportunity right there. Okay? Or you could have taken that pullback, a little bit of heat on that pullback, but hey, you got ticks. You got ticks down here. If you've taken this all the way up here, that's from 42.1275 all the way up to that's 42.19. That's just over 6 points. That's a good run right there. That's nice. So you wait if you want to. It pulls back a little bit, but then you get a green bar reducing volume there. It goes back up, and then here you go. Start running up against this stuff. Okay, you've got a red box right up here. Where's your next red box? Right here. Okay, so you get out of your long trade. Bam, get out of the long trade, get in the short trade. Keep going. So you can sit there and work. If you look at this chart, you can see there's a 3-bar right there. There's a red at the same. All 3 bars, that little red box is at the same level, which indicates that somebody's up here absorbing all those buys. It's reducing volume going up. They're absorbing the buys. They one-ticked it up here. That was a stop run. Somebody is running stops, and then bam, here we go. Come down again, come down again, come down again, come down again, come down again. And the sellers are absolutely relentless. You can see where they tried to stop the market right there. 215 orders right there. 215 again right there. And we keep going down, we keep going down, we keep going down until right up in here. Right down in this area at the end of that bar, you got a buying imbalance. So you get a buying imbalance at the end of the bar. Look at that huge buying imbalance there. Look at that diagonal. 126 to 3. I would have taken that. If I would have seen that, I'm working this level right here, I probably would have taken that as a reversal, as just a scalp reversal up in here. But then again, I don't have anything there. I wouldn't recommend that. That's a bit more of a risky trade. even though it went up, you made money here. And people go, well, I made money here, why don't I try it? Well, because you don't have a signal. You don't have a reducing volume box right here. So here we go. Pushed it up, pushed it up. Right here, we pushed up. There's 361 orders. They start flashing, going, not coming up here. Keep selling off, keep selling off, keep selling off, keep selling off. Okay? Keep selling off. You've got something, you've got one, you've got here, but there's no corresponding green box anywhere near that thing. Okay? So, there's no long trade, really no long trade to take unless you wanted to reverse it and take it here. What happened? You ran right up against here. You ran right up against this, and then it just slammed back down. Now, if you would have taken that as a loss, okay, fine. Well, you got a lot of ticks in the bank. You can't trade without throwing an occasional loss. But with keeping your stop at, like, say, for example, right above this guy, a tick or two above this guy, when you see this guy, if you're getting in here, say, for example, a short, right there at 92.25, so you've got a 4-tick stop right there, 4 ticks. Can you afford a 4-tick? Can you afford a $50 loss on the minis? If you can't afford a $50 loss on the minis, then you might want to trade the micros. So that's a $5 loss right there. How many ticks have you already made? Okay, $5 loss. You can do measured moves. You could put a volume profile on this guy and find out, okay, how far did that come? Did that come to even to the halfway point? If it didn't even come to the halfway point, for example, you're going from, say, for example, up here to here, you put a volume profile. Let me do that real fast, just for the heck of it. And you didn't even come up to, there's your VPOC. There's your VPOC right there, which is the purple line. There's VWAP. You didn't even come up to volume weighted average price. So before you got one of these guys right here, one of the red boxes. So no, the the short is still well in effect. Well in effect there. So you come down, you come down, you come down, you come down. Okay? You can sit there and work these guys back and forth and back and forth and back and forth, however you want to. Here is, you're coming up, you've got stuff down here. Well, all of a sudden, if you put your stops up here, for example, and you walked your stops down, if you put your stop right above those boxes, okay, there's your short, okay, so you got your stop up here, stop down here, and all of a sudden it comes out and takes out your stop. Okay, well, you're cool. You made some more money right there. Made some more money coming down. Just if you want to put your stops behind there and walk your stops down behind it, that's perfectly acceptable, and you will make money that way for the most part. Here's another one. Here's another short. See where you come up, the next bar, you got reducing volume. That red box, the reducing volume, is below that box, so you take the short. Bam, here you go. You go right into it. Okay. Once you get that, if you wanted to put your walk your stop down and get out of the short trade right there, cool. You made that money right there. You made what, 8-10 ticks, something like that. Okay. Ride it back up. Here we go. You could just, if you wanted to, you could just even work these areas. I wouldn't recommend it. Here's why. Because these areas are dynamic. The first bar that you're looking at, you do not want to take a trade until that bar is formed. Once you get that bar, which is formed, now you have an area that you can take a short or a long. What happened? The next bar that came up, it closed, reducing volume. It had reducing volume to the downside. They were buying it. Came back up here, reducing volume to the sell side. Okay. Closed the bar, came down, Here's your red area there. At the end of that red area, you take your short. Here you go. Bam. Even if you took it off at the bottom of that bar, at the top of the bottom of the bar, you still made money. You're still making money. You're not doing anything up here, and your stop is up here, and you're not in any danger. Just take it. If you get an opposite signal here, you can get out if you want to. Which wouldn't be that bad of an idea. You've got a buying imbalance here on there. If you just walked your stop down, you got taken out. Okay, fine, cool. Where's my next setup? Okay, I don't have any real setups here. I don't have any here because these are going up. Red going up, green going down. I wouldn't take that trade. I would start looking for areas, right? Like for example here, you have an area right here, but it's a fairly wide area. Let me put a rectangle around it so you can see a little better. You have a fairly large area right here, but you're not going down, all right? Ordinarily, that would signify that there's possible support in that particular area because you're getting reducing volume. Somebody's trying to push it down. They're not very successful right there. So you could scalp that if you wanted to. Okay, you've got this guy. Now you got this guy. This is a little bit trickier of a trade. You could take that based solely on the fact that you've got absorption of the buyers right there at 41.8450. There's really no signal there. You don't have a signal on that bar, and you don't really have a short signal until you get down here. You could take it here if you wanted to. All right, but see where all the volume is on that VPOC? There's VPOC here. Let me bring that bar up, and let's look at that in a little bit more detail. Okay, at the top of that bar, what do you have? You got a selling imbalance. You got VWAP up here. You've got that the yellow is your POC. So your point of control, all your volume is up here. Your VWAP's up here. Everything's up here. You're pretty much tapped out. So what are we going to do? We're going to come down. A little more of a risky trade, but it worked out. That one worked out. You could take it down here. It's a little bit less risky trade. Here's your stop loss up here. What happens? Bam, there you go. Does not come back in your face. Okay? And it just keeps going until we get down here. Now, here's where the buyer stepped in. How do I know? It's a red bar. Okay? It pushed it farther back down. Okay? I won't take that trade right there because you've got a green area. The second green area is going down. But now I have a signal bar right there. There was a signal bar there. Now that one's formed, that's the new signal bar. The new signal bar is here. Now, what do I want to do? Oh, I got a green area right there. Bam, here we go. I'm going to take that trade at 77.50 going long. I start seeing this area right here. I'm going to go 77.50. I'm going to go long. What happens? Bam, here we go. Up, 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 up. See how far spaced these are apart? That basically confirms that when you see those red boxes right there, those red boxes farther apart right there, you've got a lot of momentum to the upside. Lots and lots of momentum to the upside. So what's happening is they're buying. Okay, now all of a sudden, you start getting this area right here. You start getting that crap right there. So you get out. You could go short there. There's your second one right there. They pushed up. Value area low is coming right back down. It's our old friend, value area low. They keep smacking up against that, and you can see the value area low right there. But you don't know that until you get here. So what do? You've got 2 or 3 of those together. Fine, cool. Man, you take your short trade. Here's your stop, way the heck up here. Yet it never came. It came within 1 tick of your stop. Did not take out your stop right there at 41.85. See all those buyers there? 70 buyers, 148 buyers, 105 buyers. Somebody's absorbing that, right? So what happens? Market goes down. Here we go. So I'm say for example I got in right around here somewhere, maybe down, maybe from here or here. Okay. Whoops. Now what happens? It comes back down. I've got my stop loss behind this guy, say for example. Okay. What happens? Market comes down, takes me out. Takes my stop loss out right there, or either there or there. Okay. So I've got my stop loss just taken out. I made a few ticks off it. I made 1, 2, 3, maybe 4 ticks. Hey, better than a hole in the head. Better a poke in the eye with a sharp stick, as somebody used to know would say. Okay, now, what have we got? Here's our next area. Okay, our next area is right down here. We've got an area right down here that, and let me draw a rectangle around it. There's an area right down here. There's an area where they're trying to push the market down. They're not able to do it. Look at 184 sold. So what am I going to look for? I got 184 contracts right down here. Okay, they're not able to do jack. I got a green area right here. So I'm going to be looking to go long at the top of that next green area. So I can either go as soon as that forms right there at 41.84 or 41.84.25. Okay, my stop loss is down here at say 41.8250. It's a little wider stop, but what happened? The market didn't come down. Look at that. Look at that money you made. Bam! Goes right, almost straight, flipping up. Okay? So now you start getting up into this area, right? Made money, made money, made money. Oop, you got a down bar. What am I going to do? What happens? I got a down bar and I got an up bar here, but I really don't have a whole lot of signal. This is a kind of a mess, right? So if I was following that, I would have got in. I could have got out anywhere up here, right? I mean, it's just you can tell this is just a mess. Where's my rectangle? This whole area here is just a mess. They're trying to push it up. There's no buy signals, no sell signals. There's some sell signals. There's a sell signal there, but we're not going to take that because the reducing volume is higher. Okay. Again, what happens? You can take it if you want to. Okay. If you wanted to, it's a little bit riskier trade, but hey, it's working out. There you go, 41.8975. There's a short trade right there, and hey, that worked out pretty good. There we go. So all of these trades, as you can see, and you can see them on the charts, all of these trades are pretty low risk trades, pretty low risk entries. You don't have to have your stops, 7.5 points stops, which is ridiculous for a stop. I know somebody who advertises he takes 7.5 tick, 7.5 point, not tick, 7.5 point stops. 7.5 tick stops still is a little bit wide. I like 4 and 5 ticks, and this is the reason why, because it lets me, these boxes let me get in. Okay, here's one right there. Well, there wasn't anything there. Okay, so I wait. Where's the signal? I won't really have one until I wait here. Okay, what happened? What happened right there? I got a sell signal right there. It's just a little farther. It's a little farther away, but the market kept, market pushed up to here, gave me a sell signal. So I take the short right up in here. What happened? It sold the heck off. This was a pullback. This was a lower high. Okay, so I'm in the short. If I hadn't, if I'd gotten out, if I hadn't gotten back into a short up here. Okay. So, because I really didn't have a signal. I don't have anything up here. So, here we go. Sell, sell, sell. Sell, sell, sell. Sell, sell, sell. Okay. Till we get up here. You can just follow it down. Top of the, one tick above the green boxes, one tick above, one tick above. As these close, you don't put, here's the thing, you don't move your stop loss until the bar closes. Okay? There's not a whole lot of, there's only one circumstance where you want to take any action at all in the middle of a bar, before a bar is completely formed. And The place is, say for example, if you have this bar, it's formed, okay, it comes back up, and then you get one of these, right? And you get that, which is just a little bit farther above that. I wouldn't take that because it's too far down, but you could if you wanted to. Okay. So you got a reducing bar here. The second that reducing bar, that area forms right there, or not reducing bar, reducing area. The second that reducing area forms, bam, you take the trade. Okay. You can take that trade, but only if it's close to this guy. If it's not close to this guy, don't take it, because you'll see these as these move up. You'll get reducing volume on these bars, especially if it's a long, say if it's a long bar like this. You get reducing volume, green and red areas forming as the bar starts to as the bar forms. Okay, so don't let it fake you out. You have to wait until it comes back up in this previous area where the red or the previous green was to take the trade. Okay. Here we go. Otherwise, just wait until the bar forms. So here we go. Here's another one. Right there, you've got it pushed up. It pushed up there. You got a reducing volume. It pushed it right back up here. More reducing volume. Bam. Take your trade. Take your short. 82.25, 83.75. There's your stop up there. And now here we go. See that guy? That's a warning. What's going to happen? Okay, there's a warning right there. You could take it off right there. It turned out that the market pushed through it, and that's okay. I mean, you made money on that trade. Just wait for the next setup. No big deal. Wait for the next setup. Now, I'd like to go to the end of the day real quick, because I want to show you guys something really interesting. What happened? Here's the end of the day today. Okay? Now, if you would have waited till the end of the day, okay, here's a bunch of this crappy, choppy chop. See how close those things are together? You know, how close those... I don't know if I'd take that nonsense. Okay? Until right up in here. See where this guy is? Those 373 orders at 52.50. Okay? They're trying to push the market down. It didn't work. The market came back up. Right there. You've got two, see those two little bars right together? And right above it, 41.52.75, you've got a bunch of orders, right? So, what would you do? I've got two right there, three right there, but nobody's going anywhere on those bars, right? There's VPOC, there's VWAP, right? Right there. You could take a short anywhere in here, okay? What happens? There's no real long trade there, even though you've got reducing volume here, okay, which would indicate that there's volume coming back up here. It's not going anywhere. See, it's just topping out. It's not going anywhere. So you're taking the short here. What happens? That's a real good area right there. They're trying to push the market down there, trying to push the market down there. Okay, now what happens? Whoops. Now what happens? Boom. They pushed it up one more time to that level, which just happens to be value area high. Sold off big time. Now, if you miss this signal up here, it's a little subtle. You've got all your orders up here. Okay, you might not want to take that because of that choppy crap. Okay, well, if you missed it, what are you looking at here? How far apart are these green boxes? It's like, wow, check that out. The green boxes are like, yeah, you didn't get any green boxes until down here. You know, you could have jumped in. That would be a good place for the short right there at value area high. Came right back up here, value area high. They couldn't push it up any further. So here we go, value area high, bam, then took off to the downside. And then that was a nice little trade. You could have gotten out in here, VPOC. There's volume point of control right there. You could have gotten out for the end of the day, or just ridden it down and walked your stops down. Walk your stop. There's your stop. There's your stop. Right there. Pop back up. You're done for the day. That's it. There's really no no trade. The only trade here would be up right there. You're looking at VPOC. You're looking at value area high. You are at value area low. That might not be a bad place to take a long trade. Well, the market's closed, but when it opens, take a long trade there. Put your stop down here. And hey, how much money did you make today? Plenty. So you have a few ticks you can, if you burn a few ticks on that, you lose that trade, so what? So you keep going. So you're looking at a buy up here at 41.42.25 or 41.42. Risk of 41.40.50. What's that? 6 ticks. So you're risking 6 ticks to make whatever until your signal to get out. Anyway, I hope you enjoyed this video. I'm going to be releasing the study that puts these lines in and tells you where VPOC is and all this other kind of stuff into the thing, because it's really all you need to worry about. An enhancement to this is, and I think I mentioned this before, let me pull back over here real quick. See, when you're getting stuff up here, VWAP, okay, there's no buying or selling imbalances in those bars. What's the next? But the next bar gives you a selling imbalance at the top of the bar, almost at the top of the bar. Great place to take a short right there. You're in the zone. You're in that red zone. The red zone's formed. You have a selling imbalance right above you. You can take that and just hold it. And what happened? Came back up to that point, but didn't hit your stop. Your stop's up here at 52.75 and just sold off. So anyway, look at those buying, and if you have buying and selling imbalances in a bar at the top or the bottom, okay, like selling imbalance there, that is a risk reducer. If you get a selling imbalance of course at the top of the bar, of course you've got a lot more sellers than buyers. If you get a buying imbalance at the top of a bar, that signifies, and you get this red area, that signifies that somebody's in there absorbing all those buying orders. So it's a great place to take a short. So, and vice versa if you have it at the bottom of a candle. Also look at stuff like this. Somebody came in with 49.50 at 532 orders. That would have been okay for a nice, for a scalp, but it didn't go a whole, didn't go anywhere until you got in at 41.51, and you would be getting out at 41.52.25. So you made 5 ticks on that deal and then reverse it, and that's where you make your big money. But hey, 5 ticks isn't bad. That's 62.50 minus commissions. So you have 5 tick trades all day long. If you have 62.50, if you have 10 trades, that's $600 right there. That's not bad. And if you look back over through this chart, and this is just Friday, okay, there's zillions and zillions of trades. Oh, see where it came up here? They tried to shut the market off there, but here's where they really shut it off. Okay, once they get that right there, you'll see this thing was way the heck across here. The market just kept buying up. Once they put these in, that said, not going up there, you're coming down. This doesn't mean anything. Well, it does, but it doesn't. It means it's a warning. Okay, it's kind of like that setup bar. Whatever you want to call these bars. The one bar back is your possible setup bar if you've got a buy or a sell. If you've got reducing volume for buying or selling. The next bar is the trigger. Well, here it is. Here's the setup up here. The setup up there, there's the trigger. Once they threw a bunch of orders down to push the market down. See what happened? And this is one of the reasons why I laugh at these people that are saying these resting orders are no good. Resting orders are fake orders. Resting orders are, well, yeah, they're fake orders, but they have a purpose. And that's what people don't understand. I did a video about, must have been 2016 or 2017, about this exact same thing, how they move the market with limit orders, right? People will move the market. You put a bunch of limit orders in here, pushes the market down. You put a bunch of limit orders below it, and it'll push the market up. And let me see if I've got a. Let me see where this starts. Yeah, way the heck over here. You've got all these. They're trying to push the market down. Actually, this was a nice little fight. Push, 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 push. This is that big sell-off where it came up here and then started selling off. You see where they put all these orders in right here, and then the market started to sell off. There was your setup bar. There's your trigger. Boom. There you go. Or you could have taken it right there. You could have, there's two bars. There's two green bars, two red bars, two red areas together, green areas together, which pushed it up into it. You might have taken that. You might have taken a small loss, or you might have just had a break-even trade, and then it came back up. There you go. Lower red area, lower green area, we're going down, and you can see where the selling imbalances just followed. You can see where they turned around buying and selling imbalances in BPOC. Flipped over. They flipped right up here at 1558.21, 1600, right below before cash market closed. A couple minutes before cash market closed, they turned around and just started selling it. People were getting out of their trades, for the weekend, whatever. So you got that, and nice little sell-off. Started throwing orders at the market here. They threw them in here. Didn't stop the market from selling, so they threw a bunch in right here. Okay, guys, warning, don't come down here. Don't come down here. Then what did they do? They started putting them up here, pushing it down. I've got 400 orders sitting up there. I got 500 orders up there. But look at this. I got 800 orders sitting there pushing the market down. Right? Comes down here, bounces right back up. They pull these orders. They were trying to push it down, obviously, and this is great hindsight, but they were trying to push the market down to this area to where they could basically bounce off this area and then go long again. And then they had this big fight. Oh, golly, look at all those orders. Look at those orders right there. All these buy orders there and these sell orders there. They just ran right over the sellers at that particular point. But it's a fight. It's a fight. It's the end of the day. People are taking profits. They're getting out of their positions. They're going back and forth. There's buyers, there's sellers. And then, finally, you had no more people, had no more sellers to push the market down. There was one right there. It pushed up a little bit, had a buying imbalance right there, and then, poof, there it goes. There's your short. There's your short trade right in here. There's your stop. Just came back down. And now, what did it do? Cash market just closed, right? But I think this was like quad witching, I think. So, market was moving very, very fast in here. Okay? These bars were getting laid down pretty darn quick. There's your 1600. Cash market just closed right there. What are they doing? Push it up a little bit. Bam. Came right back down. And then try to push it up. They pull all these orders down here. Pull them all out of the way because they didn't want to get filled. All these orders are up here pushing the market down. Push the market down. Push the market down. Anyway, that's what I got. I hope you enjoyed this video. Comments. I know it's a little bit long. I wanted to make it shorter, but there was a lot of things that I wanted to cover, and I wanted to show you a bunch of stuff here. So now you can go back over these charts, this Delta 250 volume chart with the indicator, and look at that and say, okay, fine. For example, we didn't, they tried to push it above epoch up here. So they weren't, they pushed it, 2 ticks. They weren't able to make it. And then, bam, right back down. So Sunday's going to be interesting. Anyway, I hope you enjoyed it. And I will see you in part 2. Thanks for watching.